Hello everyone. This is the pre-market report video for today, 21st November 2023 for the Indian stock market in terms of Nifty and Bank Nifty. Last night, Conference Board released the October month economic leading index data. This is the first time I came across this macro. Basically, it compiles all the US leading, coincident and lagging economic indicator of that particular month and gives us a one value which kind of indicates how confident the US business cycle is or was. Now, on October month, the macro showed a decline of 0.8%. It was slightly below the analyst estimation where they expected a contraction of just 0.7%. Which in turn in the Fed monitoring tool increased the probability of Fed pausing the interest rate in the upcoming FOMC meeting on December 13th to 99.8%. So only 0.2% chance that Fed will increase the interest rate in the upcoming FOMC meeting. In addition, again, this also increased the probability to over 60% chance that Fed will cut the interest rate in coming May month itself. Because of all these, dollar index dropped to 2.5-month low value around 103 and even 10-year bond yield also dropped to 4.42%. This is the first positive. Then the second positive, lots and lots of AI related news. In the weekend AI conference, Microsoft unveils lots of new AI product which can help massively in the cloud business, and also Microsoft hired the former OpenAI ChatGPT CEO Sam Altman for the Microsoft AI division, who was ousted on last Friday only. All these made the Microsoft to increase over 2%. Then about Nvidia, they announced the new powerful super chip which made that stock to increase over 2%. And finally about Facebook, Morgan Stanley released the statement that in 2024 they expect Facebook as a generative AI winner. So basically all the big tech stocks rallied. In the end, Dow Jones increased by 0.58%, S&P 500 increased by 0.74% and Nasdaq up by 1.13%. In case of US VIX, it decreased near 3% and moved below 13.5. Here, couple of more things. Because of Thanksgiving Day in US, yesterday they announced that Fed will release the FOMC meeting minutes tonight itself, not tomorrow. And also, Nvidia's earnings release will be due tonight as well. Coming to oil, next week on November 26th, there is a schedule for OPEC Plus meeting. About that, yesterday, Reuters released the news that from their secret source, they expect another oil supply cut announcement in the upcoming meeting, which in turn increased the oil by another 2%. At the time of this video, Brent crude is trading around $82 per barrel and WTI crude is trading at $77.5 per barrel. Moving on, regarding Indian ADR, all of them closed positive, and also in arbitrage case except Wipro, all others increased its positive position near 1.5%. Only Wipro got around 0.5 to 1%. So from this, it looks like both banks and IT indicating a positive trade. Then about GIFT Nifty, today early morning it closed at 19,809. Yesterday the premium was just 50 points, but usually it will be around 70 points when market moving up for 2 weeks expiry time. So if we consider 50 points premium, then it's indicating a gap up opening of 60 to 70 points. If we consider 70 points premium, then it's indicating the gap up opening of 40 to 50 points. Moving on, in case of institutional activities, last week only 2 days FII bought, last Wednesday and Thursday. Now again they started to sell. On Friday they net sold near 500 crore rupees. Yesterday additionally net sold for 650 crore rupees. Even DII they net bought only for 80 crore rupees. So retail people are the one that's supporting the market. As a summary, US market closed positive, but the uncertainty around the Fed FOMC meeting minutes is still there. But for some reason, market already factored that no more US interest rate increase at all. So global momentum improved. Last night, US IT sector increased over 1.6%, which directly influenced our Indian IT stocks. So all areas indicating a positive trade, and finally GIFT Nifty indicating a gap up opening of 40 to 70 points. I'm not sure about the premium, but for now, everything expects positive trade of around 19,750. Let's see. Moving on, as per stock open interest, Balakrishna Industries, Bajaj Finance, Aditya Birla Fashion, Ashok Leyland, BHEL, Bandhan Bank and L&T Finance got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, India Mart, NMDC, SAIL, Coforge, Exide Industries, Coal India, City Union Bank and Torrent Pharma got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, nothing I'm aware of before and during our market hours, but as I said, after our market hours in the night, US FOMC meeting minutes, Nvidia's earnings results and existing home sales data are some of the items we need to keep an eye out today. Coming to technical, Nifty opened flat until 11 am. It was traded mildly negative, still above 19,700, but the negative European market opening pushed it below 19,700 and finally it closed below 19,700. Thus, on the daily chart, it formed a small bearish candlestick pattern with minor upper and lower shadows, and also the candle was within the last Thursday candle, so both of them indicating a range bound action. I mean, in the last 3 days and to some extent last Wednesday as well, Nifty was trading within the range 19,875 to 19,600, so either side breakout is due. Now, the hourly momentum indicator had a negative crossover and reached the equilibrium line, which indicates that the correction has matured. Hence, we can expect the start of the new cycle or breakout either today or tomorrow or at least this week. Just a disclaimer, in stock market, nothing is certain. In March, breakout happened only after 12-13 trading sessions. Now, it's only 4 trading sessions. However, technically it's indicating consolidation has matured, so only I'm saying the breakout is due. Anyway, here the more probable scenario is on the upside. In terms of levels, 19,600 to 19,650 is the crucial support zone where 40-hour moving average is placed, while 19,875 to 19,930 is the immediate resistance zone. As I said lot of times, technically Nifty needs to reclaim the 19,889 mark to have fresh upside, while the biggest support is placed at 19,471 mark. In case of Bank Nifty, it too opened flat and remained in the 100-150 points range, finally closed at absolute flat. Thus, on the daily chart, it formed doji kind of candlestick pattern, indicating indecisiveness among buyers and sellers about the future trend, especially after the recent correction. In contrast to Nifty, the hourly momentum indicator has triggered a positive crossover, which is a buy signal. Here, I like to highlight one thing. On last Friday, Bank Nifty got negative crossover and Nifty got positive crossover, whereas yesterday, Bank Nifty got positive crossover and Nifty got negative crossover. Here itself we can understand market didn't know which direction to move and showed how indecisive it was. Anyway, the crucial support zone is 43,400 to 43,300 where 200-day exponential moving average is present, and so we can expect some buying interest there. On the upside, 44,000 to 44,100 shall act as the immediate hurdle zone from a short-term perspective. Then, regarding weekly options front, the maximum call option open interest was at 19,800 strike, followed by 19,900, with meaningful new call option writing at 19,800 strike, followed by 19,700. Whereas on the put side, the maximum put option open interest was at 19,700 strike, followed by 19,000 and 19,600, with new put option writing at 19,600, then 19,700. Hence, the options data indicated that 19,800 to 19,900 is expected to remain as a resistance area in the current consolidation with support at 19,600 levels. Finally, one more thing. Yesterday, Nifty's put call ratio dropped further to 0.91 from 1.02 on Friday. I mean, below 1 PCR suggests that the traders are buying more call than puts, which generally indicates an increase in bullish sentiment. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.